JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 2nd of December 2020. So yep, welcome everyone. Welcome to this Wednesday's afternoon session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So guys, let's quickly jump into the charts. The German index, the DAX, this is what I talked about this morning, if you remember. I said that we might be kind of drifting a little bit to the downside, and if today's daily candle remains like this, and if it continues to slide, well, maybe we could be seeing here a potential island reversal. So another technical kind of pattern, and if so, then yes, lower levels could be met here. Initially I'll target this 13,213 zone. Or if that's not enough for the sellers, then the next little target could be near this upside support line taken from the low of the 13th of November. So for now, all eyes are on this, guys, and also keep your eyes on this hurdle, this 13,347, because if by any chance the index gets back above it and closes above it, then well, we could skip the downside scenario and aim for the upside again. But for now, in the short run, yep, there is a chance for this one to go for a bit of a larger correction here. Now, jumping into the US indices, so in particular the Dow Jones Industrial Average, I haven't looked at this one for quite a while. I removed all the drawings basically just to kind of have a fresh start, fresh look. But basically yesterday it did have a move higher. It did fail to reach its all-time high, which is around here near the 30,116 zone, but it did come close to it. However, the sellers managed to kind of drag this one below the psychological 30,000 zone, and yep, although the index closed slightly in the positive territory, it remained below that psychological 30,000 territory. And if we look at the cash index right now and where the index is currently trading at before the market open, we'll see that the price is near the 29,660 zone. So basically we're seeing a bit of a decline here. So yep, let's see how all this is going to play out. We're near the high of the 23rd of November here, and yep, let's see how all this is going to play out, because at the moment it seems that the index is preparing for maybe a little bit of a setback. However, again, let's not rush into anything yet. Another thing that I really wanted to kind of point out here is, first of all, we're still trading above this upside support line taken from the low of the 12th of November. But if we draw it another line here, let me just grab this one right here. There we go. So let me just, guys, quickly capture this one. So it's a little bit tricky here. Let me just drop it like this. Now we could be seeing a potential rising wedge pattern. Now, of course, according to all the TA rules, you know that these patterns tend to break to the downside. However, until we see an actual break and we see the daily candle remaining below the lower bound of the lower side of the rising wedge, we cannot really aim for lower areas. So once we get that, yes, then we could consider a bit of a decline. But at the moment, what could happen also, it could drift lower, but then it could reverse back to the upside and kind of end up testing the upper side of this rising wedge. So that's why be very careful with this idea for now, and wait for that confirmation break. And one of the confirmation breaks also, or should I say one of the confirmation, confirmation breaks that we could consider could come here near this 29,463.64 zone. So that's the yesterday's low, and if we get a drop below this, then well, this could open the door towards lower areas, guys. But again, for now, be very careful. Let's see how all this is going to play out. But at the moment, yep, it's looking a little bit or should I say the index, the cash index, looks a little bit on the weaker side. Now jumping into DXY did drift lower initially. However, as you can see, the bulls stepped in and are trying to lift this one. However, we're still trading well below this 91.75 territory. So as long as we remain below this area, yep, there is still a good chance for the sellers to step in and drive this one lower towards the 90.93 territory. So basically the same kind of analysis remains, the one that I discussed this morning in terms of the upside. Now previously I talked about this level here, the 92.61, but given the further we move away from this, or should I say, the further we move to the downside, the lower the potential breakout level for the upside could become. Now, one of the levels here could be this one, the 92.24 zone, which, as you can see, acted as a good area of support previously, and then also a bit of it acted once as a good resistance. But at the same time, this could come in line with the potential break of this downside line. So, if this downside line gets broken and we see the price pushing above the 92.24 zone, then yep, higher levels could be met, guys. So be very careful for now, be very cautious. But again, at the moment, I'm still leaning a little bit more towards the downside. Now gold, is made its way higher today. So it did pop above this 1818 zone, not to mention this downside line as well. So at the moment, everything's kind of leaning a little bit more towards the upside. However, be very careful, because if by any chance the gold starts reversing sharply back below this downside line, then well, maybe not all is good in the bull block, and maybe we could see actually this one drifting back down again, especially if the price drops below the 200-day EMA and the 1795 level. So for the downside, if you want to look at some lower levels, wait for at least a drop below that 1795 territory. In terms of the upside, if we see the daily candle remaining today above this 1818 zone, this increases the chances for a possible move higher. I'm not talking about a major move north here, but at least towards these EMAs here, the 21-day and the 100-day EMA, shown as the yellow and green lines respectively. Ripple. So Ripple is well, it's a little bit stuck, I would say. However, first of all, let me get rid of all the lines probably, because let me just start off fresh here. Now, what's happening here? We do have ourselves a potential triangle here. Now, let me just quickly draw this one on the chart. Oh, there we go. So something like this. It's and we can see that the crypto is currently coiling up, which means that it seems to be preparing for a possible kind of breakout. So for now, it might move sideways here, but given that the prevailing trend here was to the upside, there is a good chance we could see this one popping higher. However, if you want to aim for some higher levels at this point in time, probably wait for at least a push above yesterday's high, or not. There we go. so just removed it suddenly. So wait for a push above yesterday's high, which is around the 0.6828 zone. A nice good pop above it, yep, could open the door towards higher levels. In terms of the downside, well, wait at least for a break of this upside line here, or the lower side of the triangle, in order to consider some lower areas. And to kind of strengthen that idea, what you could do is keep an eye on the 0.54 territory somewhere around here, guys, and then yes, a break below it could open the door towards lower areas. But at the moment, basically, we are coiling up here a little bit. So probably, if you're not comfortable trading in here, just probably sit back and relax, and just continue observing the price action, and then wait for the perfect exit. Now, jumping into a few pairs, AUDNZD, I haven't looked at this one for quite a while, but let me just remove all the drawings as well. So basically, looking at this overall, we can see that that the pair is kind of back to the level where it started off 2020 this year, basically. So let me just put a level here, and let me just grab the January 1st opening price here. So on January 1st, the opening price was around 1.0412 territory. So let me just grab this one, 1.0412. So let me just capture this one very quickly. There we go. So that's the opening price for this year, guys, and as you can see, opening rate for this year. As you can see, we have managed to travel higher here this year. We managed to test this area around the 1.1044 mark, from where you can see that was the kind of the peak of this year. And to be honest, well, I doubt that we're gonna get back to this level by the end of this year. Now the big question here is, will this pair remain in positive territory? As you can see, yesterday we got a drift lower here. The pair almost came close to testing this area. But yep, today we're having a nice rebound. So basically, it's showing how important this level is for this pair. And at the moment, well, we could consider maybe a bit of an upside move here. However, it's a little bit tricky with that idea, because it still is declining. The pair is still on a downtrend, and although this area could be considered maybe as a possible support zone, still the trend is to the downside. Now, to kind of support the bullish scenario. Now, again, don't focus on this too much, but just keep it in the back of your heads. Now, we could potentially be seeing here maybe a possible falling wedge pattern, and again, as you know, according to all the TA rules, these patterns tend to break to the upside. So something like this, basically, if we draw it like this, then yes, there could be a possibility to see maybe some upside. However, as I mentioned to you guys previously, with Dow Jones Industrial Average, we cannot really talk about the upside until we get that clear move out of this pattern. And in this case, we would prefer to see, of course, the technical analysis rules working out, and we would like to see this one breaking the upper side of this falling wedge. But until that happens, still the trend is to the downside, and that's why be very careful. But if we get a break through this area, through this upper side of the of this falling wedge, and then we get also a push, just to kind of confirm it, a push above this high, the current highest, or actually the 30th of November, that's not the current, no, no, that is the current high of this week. So yep, there we go. So the 1.0522, that's the current high of this week. If we get a nice push above this area, then yes, higher levels could be met, guys. But at the moment, well, I mean, it's a little bit still to the downside. However, if you want to aim for lower areas, if you want to be a little bit more on the safe side, wait for a drop below this 1.0412 territory, the opening price of the opening level of this year. And this way, yep, the pair would be placed in a negative territory for the year. USD CAD, quick update here. The pair is still balancing above this 1.2928 zone. So basically, for now, we're just waiting to see what it's going going to happen here, if this daily candle will remain above this area. If it does, then wonderful, good news for the buyers. There could be a possibility maybe to see an up move here in the near term, but don't probably the buyers should not get their hopes up yet, because we would still be below this downside line. Now, if this downside line gets broken and the pair travels back above this 1.2995 territory, or in other words this psychological 130 zone, then yep, that's where more buyers could join in. But at the moment, still the trend is still to the downside. GBPCHF, I haven't looked at this one for quite a while, but basically, as you can see today, the pair is selling off. There is weakness in the pound, a lot of weakness in the pound today, of course, due to ongoing Brexit, let's call them talks. Yep, for now, basically, for now, the pair is getting closer to this upside support line taken from the low, the 14th of September. So another thing here, as you can see today, the current holdup is occurring near this 1.1911 territory, which is marked near the highs of the 21st and the 22nd of October. Let's see if this can continue drifting lower, because we do have this upside line, which could present itself with a nice opportunity for a rebound. But again, maybe I'm getting ahead of myself, but if it does that, if we do see a nice rebound here, then another up move here could be possible. So let me just draw this one very quickly here on the chart. So something like this I'm considering right now. Let's see if this is going to work out. But if this suddenly gets broken and the rate drops below the 1.1798 or 99 zone, or in other words the 1.18 zone, if the pair drops below the 1.18 territory, then yes, we could consider a bit of a down move here, a further move towards these lows, the lowest point of September, or the lowest point initially towards initially to the lowest point of June, which is around the 1.1631, or like I said, the lowest point of September near the 1.16 zone. But again, still a long way to go. First, all eyes are on this upside support line. EURUSD finally. So the pair is a little bit flat here today, so not much excitement. However, on the positive note is the fact that the pair continues to balance above this 1.2055 territory. So in a way, if it continues to do so, then yep, we could consider aiming for the upside. And as I mentioned this morning, my next target is the 1.2155 territory, which is the lowest point of March of 2018, guys. So that's going to be my next target, especially if the rate remains above this 1.2055 territory. If it doesn't, if it drifts somewhere lower here, but still stays above the 1.20 zone, I'll take a bit of a neutral stand. But if it starts dropping back below the 1.20 zone, then well, maybe we could go for a bit of a larger correction. However, there is a lot of buts there, because we could still find maybe some support near this tentative upside support line, short-term tentative upside support line, taken from the low here of the 4th of November. So keep your eyes on that one, guys. So guys, I really hope you found it useful. I'll have to wrap it up here. Thank you very much for watching and listening. If you want to catch my video tomorrow morning, as always, my Trader's Espresso, 7 o'clock GMT time. For now, have a wonderful, wonderful evening. Stay safe, and I'll see you later. Thank you very much, and bye-bye.